Good morning, it's Adil Fazal bringing you a European market wrap-up of European indices this morning on the Monday the 5th of October 2015. Okay, right, be sure to visit cfds.com. This video is brought to you on behalf of them, and certainly be sure to visit the website www.cfds.com for your trading needs. You have the ability to apply for the CFD account and the spread betting account, and certainly trade. With regards to education, there is an educational site as well, www.cfds.education, where I provide charts and analysis and my latest videos and insight as well. So be sure to visit those two websites for your trading needs. Okay, so European market analysis. How do we sum this up? First of all, like I did with my FTSE video, overnight the Japanese markets obviously were higher, so slight risk on tone there. Given the fact that the US market surged late Friday, given the fact that expectations of an interest rate hike were pared back, and that obviously led the QE or the easy money obviously rally, and the markets have obviously been euphoric ever since, especially given the fact that Nasdaq is now touching the 4,300 level. Now, is that good news for the actual European equities? No, it isn't, because a weaker dollar obviously means the euro going higher. Euro going higher obviously means that European equities are under pressure because the whole QE project goes back into reverse, and that isn't a good story. Okay, so that certainly seems to be the conundrum now. Yes, European markets have gapped higher because they've obviously aligned themselves with the Asian markets and US markets, given the stellar rally in the US markets on Friday, and obviously as we can see overnight as well. So the European markets certainly are pushing higher, but we have an obstacle. Why? The reason being is because you have Volkswagen concerns, number one. Volkswagen still is down and still under pressure. If I bring up the DAX auto sector and show you, bear with me. Have I got that here? No, I haven't, so bear with me. Let me just bring this up for you. Alright. Here we go. Okie dokie. Okay, that's not the one. Right, bear with me. See if we can bring all this up now. There we go. Okay, so bring up the rest as well whilst we're at it. We need the banks. You need retail. I think that will be good enough for now. Okay, let me just save this so I don't have any problems again in the future. Okay, so auto sector obviously remains the key. So let's go straight to the automobile, and you can see that we are obviously finding resistance immediately. We've certainly come into this resistance zone here, given the fact that that was a pivot low on the pivot high, sorry, on the 2nd of October, and that certainly remains a zone. If that obviously fails, then we have this next zone as well. So these zones of resistance that we see at present. The 10-minute chart certainly is starting to turn already, and certainly has come off the thrust higher, and is now obviously into resistance. So the auto sector obviously is number one. That certainly seems to be the first variable. Okay. The euro, obviously Euro USD, again given a weaker dollar post NFP equals a higher euro, and that obviously is negative as well. The third variable in terms of being negative is the European data that's come out so far, or thus far. The only data that actually beat was French data. Other than that, German data weak, European data weak. Italy and Spain certainly weak too. So therefore, the risk-off factor and any bullish scenario certainly has been negated thus far. Okay, so that certainly seems to be the situation that we find ourselves in. Now let's try and look at the market from a technical perspective now. Okay, so we're going to start off with the DAX, because the DAX is a chief in Europe, and this is a weekly chart of the German market. As you can see, we have a bottoming tail. We've thrusted and pushed off from the lower level. The daily chart itself has held to a bottom and obviously has pushed half higher, but given the fact that the weaker European data that has come through will certainly have a negative impact on the actual index itself. Now the 60-minute chart of the German DAX, again, previous support equals resistance, and obviously previous resistance, horizontal resistance as well, and therefore that's holding. Given the fact that the euro itself was previously at the 1.128 region, has slightly pushed back at present whilst I make this video, but we certainly seem to be into resistance on the Nasdaq, and therefore that obviously means resistance on the German DAX as well. The 10-minute chart itself, obviously you can see here we are struggling at this 9790 top, and the German DAX is attempting its best to certainly hold that level. We do have a rising contracting wedge pattern and currently a bear flag formation, and higher probability given the fact that we have an unfilled gap below in the German DAX. That certainly seems to want to close, or it's certainly going to attempt to close, especially with a weaker dollar means a stronger euro, and obviously that's considered bearish. Okay, now especially given the fact that the weaker economic data that's been out recently as well. The German MDAX again is into resistance. As you can see, we are slamming into the 200 MA, and therefore that equals resistance for the MDAX, and therefore that's resistance for the German DAX itself. The All Tech All Share Performance Index again is coming into diagonal trendline resistance. We have horizontal resistance up here, so again that's coming into resistance. We have this previous support equals resistance, so again that certainly is coming into resistance, and therefore is resistance for German DAX, and that obviously is interpreted as resistance for the actual European markets in total. Now, if we go to our CAC, and that certainly seems to be the only index that's actually strong, and obviously economic data does confirm that as well. Looking at it from a daily chart perspective, at present for the French CAC, we certainly are thrusting higher, and there is a high probability that we can actually continue its thrust higher to the 10660 level, potentially even higher. This is the CAC mid 60, by the way. Let me just bring up the actual CAC 40. Apologies. Okay, that's the volatility index. I never seem. Oh, here we go. Okay, so if I just go to the weekly chart, the French CAC, again, bottoming tails, we're pushing off, thrusting off there. Again, we certainly seem to be in this zone. Using the pivot high, taking it to pivot low, you are coming up to the 75% resistance. So certainly an argument for resistance on the French CAC. The 60-minute chart certainly has broke out. Obviously that diagonal trend line has not been respected thus far, but we are into horizontal resistance, as you can see here. You have the unfilled gap below above at 4650, so there is a possibility, a probability that can be closed. But given the fact that we have failed to close the gap below, and that certainly will be a factor in terms of the French CAC, and obviously the euro itself being into support and weaker economic data this morning. So there certainly is no catalyst at present for the gap above to close, but certainly a very strong catalyst for the gap below to close. Okay, now the 10-minute chart of the French CAC, just observe that as well before we go. Certainly again, we certainly seem to be, given the fact that we're above pivot R2 now, pivot R3 isn't too far away, but we are into that resistance zone, and that certainly needs to be respected at present. Again, like I said, the unfilled gap below will act as a magnet for the French CAC, and that certainly needs to be closed. Given the Volkswagen concerns still remain, and given the weaker economic data this morning, don't be surprised if that obviously gap is filled. Okay, so again, always remain open to every possibility in this market. Eurostoxx, I can still quickly go over that. Now, before I do, I'll just go over the volatility index for the French CAC. The volatility index is now coming into support, and it has a bullish formation now on the volatility index, and therefore that's bearish for the CAC. The VSTOXX again itself, looking at a 10-minute chart, we are coming into potential support, so therefore that's bearish for the Eurostoxx, given the fact that we are into that horizontal support and we have held, and therefore don't be surprised if the Eurostoxx now starts to fall, okay, and the Euro USD starts to rise. That's my interpretation, that's my expectation as well. Okay, that's why I expect to occur. Okay, the Eurostoxx now, the actual index itself, bring that up and give you analysis on that as well as a morning market wrap up. Okay, so weekly chart, Eurostoxx at present, yes, we've bounced, held those bottoming tails, certainly reversed quite impressively, even though the Volkswagen concerns and etc remain in the background. Fib retracement, taking it from the high to the low, and we are coming into that fib 75, 71 or 65 or 61%. The 60-minute chart, the Eurostoxx, again, we've slammed into that 200 MA. We're in that zone where previous support equals resistance. We have the next resistance zone at 3200. Given the fact that we had weaker economic data, I certainly expect a move lower at this juncture. And given the fact that Euro USD certainly is into support due to the NFP data, which means a weaker dollar, higher euro, and that is not positive for European markets. Okay, again, unfilled gap below will always act as a magnet and drag price action down, so therefore I am expecting the markets to move lower. I do, just for the record and my declaration, given my bias, I am actually short Eurostoxx at present, and I do expect a move and a thrust lower. Okay, the last chart I want to discuss with you is Euro USD, because this whole market is basically wired to the Euro USD itself. As you can see here, we've got a failed bear flag, and therefore you're looking for a short squeeze in the daily chart. 4-hour chart itself is a bull flag, although we have rejected this pivot high at 1.1290 at this current juncture, but we currently still remain in a bull flag supported by the weaker NFP data, and that means a weaker dollar. Okay, and that's why the European equities are certainly into resistance. Again, that 1.1290 level certainly is resistance for now, and we'll see whether or not we can test that 1.13 level again. We're certainly needing fair to increase, and that certainly is what we are observing and what we are potentially expecting as well. Okay, 10-minute chart, yes, we've pushed lower. Euro USD now back into support, therefore EU equities into resistance. So that's the scenario and situation that I expect to play out with regards to the actual market itself. Okay, that certainly is a summation of European equities. The Euro USD must be watched like a hawk. And the move in the Euro USD will obviously dictate and forecast the move in European equities, given the QE nature and the interlink there. Okay, folks, again, remember the three arguments here. You have number one, you have the concerns with regards to Euro USD and the NFP. Okay, the other one, you have Volkswagen, so that certainly remains an overriding fundamental bias bearish, okay, due to it, and the ongoing concerns with regards to the scandal there and the impact that it has on the German automakers and the rest of the sector in terms of parts, etc. And then obviously you've got the scenario with regards to weaker economic data this morning. So these three catalysts put together certainly indicate a risk of scenario. Okay, folks, I think that's a wrap. Be sure to visit cfds.com for your trading needs, and like I said, please do visit the educational page that I constantly update information. Okay, that's a wrap. Goodbye now and safe trading.